Hello, Maverick traders. Welcome out to your market roundup. It's March 17th. Corey here with you. Always a lot of fun. We're going to go through what's moving markets. We're going to talk about sector rotation, what's heating up, what's cooling off, and then as always, highlight our very best ideas, some interesting happening in the markets right now.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Now on the surface today kind of looked like a rather ho-hum bounce back day. If you look at the Dow, the Nasdaq, the S&P, all up around 0.5%-ish. The Russell had a little better rally, up 1.26%. Gold and oil, again, slightly higher. So there wasn't major burst to the upside. But here's why I think the market's bouncing was important. We're going into an uncertain time with tariffs. We have the Fed meeting on Wednesday. We have a lot of reasons that could further fuel the downside. And the very fact that the markets didn't keep aggressively falling here, that we've had a little bit of a reprieve, it gives some people an opportunity to sell on the bounce, and it makes it less unruly. It basically is a bear rally short setup. Don't get me wrong, I would anticipate that there's still further downside likely coming, but it gives an opportunity for the short seller to get a better price, for the person that maybe was trapped to not liquidate on the worst of prices, but to use the bounce to do so, and they're probably going to do just that. Advanced decline line, 20% of stocks down, 77% of stocks up, and the 50-period moving average is bearish with 2/3 of stocks in a downward trend. So here's the chart pattern, and we've been talking about kind of a flush to the downside. We didn't get a massive flush, but this is the type of dynamic where you sell off and then notice the gap up. And last Friday, when you gapped higher, it rebounded about half of the prior day's decline. This was a pretty good idea that, hey, this is a substantial reversal. This is one where there's probably going to be a little bit of follow through. Gaps are important. The size of candlesticks, those tell about maybe aggressiveness of the buying and selling. And so that gap was important, and sure enough, we've had a little bit of follow through. Now, what I would be watching for is one of two things. If this market has bottomed, what will happen? What will happen is a really big up day with the vast majority of stocks going higher. It'll be an 80% plus up day, meaning the just widespread buying across sectors and so on. I don't think that's going to happen, but that would signal that basically this bottom is in, and that although there will be zigs and zags, that we should anticipate higher prices and higher prices to come. What's more likely is that you'll have, tomorrow is the day before the Fed meeting, and usually that's kind of a quieter day, the Tuesday before. So let's give it a little doji type look. And then the Fed meeting is going to bring about some volatility. And let's say, for example, maybe it shoots up a little bit, but then finishes poorly, kind of on the lows or something like that. And then you'd have another bearish candle reversal, an opportunity, I think, to short this market for a push down below the prior lows. So is that possible? That we get that type of reversal? I think it's kind of 60-40. I think it's more likely that we get the downside push and that we make new lows coming up than that we really recover in substantial fashion. So I'd give it the 60-40 rule, 60% probable to the downside, 40% to the upside. That's how I see it. Again, the Nasdaq kind of lagging. It had the same gap, but a little bit lagging in terms of price performance today and just overall bullishness. You've kind of rallied up into a gap zone here, but can we make that big extended move? Can we get that big buying burst where we've set a bottom? Probably not. We're probably rebounding quietly and then going to go back and take out those lows. So the trend is certainly bearish, but today was a very bullish day. Look, widespread buying and following Friday's gap up. I'm not surprised that there's more money kind of flowing in. Again, it just gives a reprieve and it gives short sellers some reason to cover. It gives buyers an opportunity to use a bounce to liquidate, and it creates more stability in the market. If this hadn't occurred, if there hadn't been follow through, then things can get really carried away to the downside. That's where all of a sudden you could see a day where the market's down 3%, 4% in a single day, where there's not an opportunity to kind of come up for air. And so I think the markets will be a little slower moving. The volatility index takes a big hit on a day like today because, again, I think it creates a more stable market and a less violent one. Tesla just continues to really struggle. The majority of the large cap tech names, look, they've been a drag on the S&P 500 this year. No way around that. Other sectors are outperforming. Consumer defensive has been strong. It's really widespread. So interesting that now the equal weight S&P is outperforming the S&P itself, meaning more stocks are doing well, and then these big names are doing quite poorly, and they're dragging and holding the market down. So let's talk about some areas of interest. We've been on the gold trade. Gold miners still look good. We've been on the short NASDAQ 100 trade, and there's other names that also look bad. Let's look at a few of these charts together. AbbVie, what I like about this is how it's been consolidating while markets were struggling. Now it sets up for a bursting move to the upside. So AbbVie looks like we can take out the prior highs. Nice high basing pattern. The gold miners, this is just what their charts look like. Breaking to new highs. And I've said this before, it doesn't take a rocket scientist to understand that gold prices are at new all-time highs. And so what do gold mining companies need? Well, they want higher prices in gold because that creates bigger profit margins. If they can sell their gold at $3,000 an ounce and they're pulling it out of the ground at $1,500, right? That's a bigger profit margin than if gold were priced at $2,700 or $2,500. So the higher gold goes, the more profit for companies like Barrick Gold and Newmont Mining, and their charts reflect that. On the downside, looking at things like FedEx, see how it's coming up underneath to retest what we would call a kiss goodbye. It's already broken to new lows. Now it's giving the little kiss goodbye. Usually, I teach support and resistance is like a trampoline. There's some give. So don't be surprised if it kind of squishes up into this and then propels to the downside. It's not cement. It's not a hard surface. It's more of a squishy surface. You know, when you land on a trampoline, there's some give and then it propels you. This is probably the squish into the trampoline and then it can propel us to the downside. Goldman Sachs, same type of dynamic. This thing has broken down below support levels. It's coming up into that, and I would expect to be resisted and repelled to the downside. Notice the high volume sell-off, the light volume rally. Classic bear rally short patterns have that. Markets are likely to remain under pressure big picture unless there's that really high percentage up day. If we get that big bursting move, it would establish a low. It would really change my mind about some things, but I don't expect it. Fed meeting on Wednesday and then earnings this week. You've got a few companies coming through, Carnival and General Mills and FedEx and Nike, to name a few. But ultimately, I think this trade is going to be more based on the Fed meeting on Wednesday. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.